The most risk we have on is the better way to say it. So
Yep.
we've got a lot of trades over the dollar, the euro, the yen, and the sterling. And this is the one with the highest conviction. The Bank of England has been very stubborn in my mind about rate cuts. At the last meeting, they were signaling that they're near the end of their rate cutting cycle. There's been a huge debate amongst the Fed, ECB, Bank of England, and BOJ about where is neutral, where's our star, and let's just get to neutral and see how things play out. The data in the UK, in my mind, is actually saying you don't need to get to neutral, guys. You need to go below neutral. You need to start talking about being looser with your monetary policy. The Bank of England's currently looking at pretty stale data in my mind. They're looking at the wage data, which is pretty strong, sure. But we're seeing job firing in the UK. So what that means is, in terms of trades, we really like outperformance of gilts versus US Treasuries. We like the outperformance of front-end Bank of England contracts. We're looking to price in more rate cuts from the Bank of England. And I think over the next couple of months, we're going to get the confirmation in the data from the official, from what we're getting from our leading indicators in the surveys.
And we had somebody on yesterday talking, the surprise could be ECB rate cut. Can I go Nerdfest history?
Sure, you bet.
Okay, Jordan, let's go history here with British guy. Neil Dudd is writing up about the beverage curve, beverage of LSE, the London School of Economics. You've got the disinflation and deflation of middle 20th century in Clement Attlee, England. To me, 6 months forward, a year forward, the disinflationary tendency globally is a huge deal. Will China lead that way? Will the Pacific Rim lead the way to a shockingly low level of price change?
I think they already are. China has been exporting disinflation for quite some time now. They're going through a balance sheet recession thanks to the changes in their property market with the tightening of credit that we saw all those years ago. And we're seeing much less demand for Chinese households for homes. And that's fed through to excess supply in other sectors, especially in tech, such as solar panels, electric vehicles, and so on. China, over the past 5 years, has gone from being nowhere to the largest car exporter in the world. That is a huge part of CPI for many baskets out there. Your car is your second largest purchase in terms of your life, typically. So I agree, Tom, that the disinflation from China is going to carry on. In terms of the rest of the basket, the other part is food. So food prices were really, really strong over the past year or so. That's starting to unravel. And also in terms of dry January, I'm trying my best to keep myself off chocolate, struggling with that. But the good news is cocoa prices are down, I think around 30 to 50% from the highs. So big parts of the food basket are heading in the right direction, as well as oil.
If you have dry January, like, do you stop watching Liverpool or stop watching Man U or whoever the favorite team is? Is that how it works in England, Jordan?
No, we're not always drunk when we watch football.
Okay, thank you. Somebody stopped me yesterday, folks. Thank you, Michael's great lunch. And Paul, this is really important. They said, how do you do it? Jordan Rochester's killing it here.
Always.
Torsten Slok just comes out with Apollo Global, and he goes to what Jordan does, what I do, what Torsten does, which is the microeconomic foundations of all this blah, blah, blah. Torsten Slok, the bottom line is that falling demand and rising supply are putting downward pressure on home prices. And that is Mr. Rochester mentions food. It's the same thing. Folks, look at demand of labor, demand of housing, demand of whatever. I mean, that's the way it is.
Jordan, we started, or maybe almost a year ago here, we saw European countries really step up their investment commitments on infrastructure, on defense. Is that still a thing today? Are we seeing that in the numbers yet?
It's still a thing. We're seeing it in terms of issuance from Germany. The plans are there. We're seeing it in terms of defense contracts being made. What we're not really seeing in terms of feed through to the hard data. So industrial production in Germany is still in a structural recession. Germany is in second place for the worst competition there is, which is highest industrial electricity prices and manufacturing prices for energy. Number one spot is the UK, but that's another story. The Germans are dealing with structurally uncompetitive energy prices versus China, US, etc. Chemicals production, industrial productions have shifted abroad. The defense spending, the infrastructure spending, it's being penciled in, but these things take time, especially for infrastructure. And so the hope is this year it feeds through to the data and it lifts all boats. But there is a question now between planning and actually the rollout and getting shovels in the ground. That's the big question for 2026.
Jordan, as we start 2026, what's the call here for the UK? What are some of the trends that you're looking for this year?
Well, in terms of the UK, we're looking for the labour market to continue to signal job losses. There's a few surveys, such as the CBI and the decision maker panel from the Bank of England. It asks the question, are you looking to hire? They've fallen off a cliff. It's Lehman Brothers or COVID in terms of historical parallels to how much they've fallen. And that's thanks to the Labour Party's tax rises in the budgets, the previous two. Will we have a new prime minister is the big question. It's not really an if question now, it's when.
Okay, I read Dominic Constam carefully. Jordan was advantaged by having Steve Risciuto and Dominic Constam working with him at Mizuho. In the second derivatives here, the accelerations, the rates have changed, Jordan Rochester. As you mentioned the phrase, falling off a cliff. I mean, I'm sorry, Jordan, globally things are moving. Do you see the same quote, falling off a cliff, when you and Steve Risciuto have a beverage of your choice?
Not the same in the US. It's definitely softer, but the signals have been so mixed. It depends on which survey you look at, which leading indicator you get in the US. Initial jobless claims say absolutely fine. Nothing to see here. Challenger data this morning said that layoffs fell to, I think, a 14-month low. So in the US, you have fiscal spending. And it's been front-loaded to help Donald Trump in the midterms as well. So this year, we'll actually see US data recover. So I'm being influenced a bit by Steve here because he actually thinks there's no rate cuts at all from the Fed this year.
Wow.
But I do agree that the data could improve in the US overall in Q1 and Q2. Okay. But I am worried about Friday, guys. Because economists think the unemployment rate's going to go down.
Yeah, Michael Barr's worried about Friday, too, because that may be when a Lions coach goes. That's a different story. Jordan, we talk about two Americas. John Edwards of Louisiana, presidential candidate, folks, decades ago, came up with this idea of two Americas. Jordan, describe two Britons. When I say there's two Britons, what does that mean?
I don't know. You got to tell me, Tom.
No, come on. There's London where they're booming.
Are we talking K-shaped economy, I think, right?
Yeah, Pharaoh's looking in Mayfair at like 4,000 square feet.
Yep.
It's like Saudi money. It's amazing. Come on. The polarity of the falling off the cliff you're talking about in England is tangible, right?
It really is. But what's interesting is there has been a massive regional rebalance over the past 5 years since working from home became a thing, and also because you've had a Brexit where a lot of foreigners used to live, and now we've had emigration from EU nationals out of the London bases. So you've seen house prices, for example, in the rest of the UK, which is much cheaper to live outside of London. They've actually stayed pretty elevated, and they've been rising, whilst London has seen dramatic falls. So you're right, there is this two Englands for sure. But interestingly, over the past 5 years, I'm from Birmingham. The place is looking more and more like London each day in terms of what restaurants are there, what shops are there. And, Aston Villa's doing pretty darn well in the Premier League. So everything's on the up.